is suffering right now is education community. And so my goal is hopefully to show that we can teach at the early years, that the is the most important, and show that we can make a difference at this age that will go straight through to high school and follows these kids into college. My business really helps others around. It allows moms to go back to work sooner. Where we're located is kind of a central location, and so moms can take off during their lunch breaks, their lunches, everything, and come visit. I had that opportunity with my first child, and that was a big factor in me going back to work. Because then I could just pop down the block, go see my son for a little bit, and then pop back. And so that's a really open door policy with new moms and moms with infants, which is huge. We also are partnering with the Hillsborough Chamber for the School to Work program, bringing in high schoolers to know our older kids. There's a lot going into the ECE program over at Portland Community College, so this kind of gives them an introduction to that. And we're also partnering with Portland Community College, bringing in their teachers to teach their teachers to teach.
Hi, I'm Casey Schock. My husband and I own Schock Dairy in Hillsborough. We're a small family-owned dairy farm in the Helvetia area of Hillsborough. My husband grew up on his family's dairy farm, and we had been there since the 1990s, and we were dairy farmers. He farmed there probably about 2008. You were talking about the economy kind of tanked. It's difficult enough to be a farmer, and then a dairy farmer's double difficult because you're working continuously. You're milking cows twice a day, every day, and the milk price was low, and we just thought, we have got to rethink what we're doing. So we kind of sat down and decided, how could we do this so it's more manageable, it's not as much work, and we would enjoy it more. And we decided, well, if we did the entire process, if we milked the cows, pasteurized the milk and bottled it and sold it right here on our farm, we could have less cows and we could kind of see the whole thing. So we kind of investigated that and talked about that and decided after some thinking that that's what we wanted to do. So we sold our dairy herd of 200 cows, and we kept a few, some of the family 4-H cows. I have 4 sons, so we had some cows we were attached to. And started in building our facility. We spent a lot of our time and money, and it took a lot longer, as building projects always do. And our funds started to reach the end, and we weren't finished, and we thought, how are we going to finish this? And so we went to a crowdfunding source, and we put our project on Kickstarter, and we successfully raised $50,000 from friends and community members and people really all over. And that was the final money that allowed us to finish our project. And our creamery has been in operation since October of last year. People come out to the farm, buy their glass bottle whole milk, visit with the farmers, say hello to the cows, stop by and see a few of the chickens, and kind of make a day of it. I feel like our business helps the community because it kind of brings the community together. People are constantly, and it's been very evident to us that people want to know where their food comes from. They want to meet the farmer that's milking their cows. They want to see the cows and how they're treated. They want to know, they want to be connected to that source. So I feel like we bring people to us and educate them about animal husbandry and how we take care of our cows kind of the old-fashioned way. And it's wonderful. I get to meet so many people, and they're so thankful, and they thank us every day for milking the cows so they don't have to. It's been a great experience. It really has.
Well, I really appreciate you sharing all of those insights about how you started your business. And we have more time to ask questions of our panelists. But we have two other panelists who are going to take a little bit different look at this, how do you open your doors. And I'd first of all like to introduce Joanne Plume. And Joanne is the manager of Bank of the West. And that is a local bank here that some of you may know of. And she's going to talk to us a little bit about best practices and also, you know, what do you need to do to get a loan or capital for your business?
Thank you. As Susan said, I'm with Bank of the West. I've been at the Cornelius branch for the last 20 years and in banking in Western Washington County for 35 years. Long time. So Susan asked me to talk a little bit about startup financing. I'm not a real expert on that. My bank does not do startup financing per se. There are other means to obtain startup funds, like Casey was talking about for one thing. We do both SBA loans and conventional business loans, as well as ag, commercial real estate, a whole gamut. Through SBA, we do offer business acquisition loans. So if you're wanting to get into a business and want to buy an already existing business that's been in operation for a couple of years, that's something that definitely we could take a look at. Some of the things that we would look at in that situation are, do you have direct industry experience? So are you buying a business that is something you've already had experience, maybe you've been a manager in a similar business or involved in that. Typically on an SBA loan, you would need 15% down, but depending on what you're purchasing, it can go up to 25% if a large portion of what you're purchasing is what we call blue sky. It's not a tangible asset. So it's also fair to mention that SBA does have a lot of programs, so you may not be able to get startup funds from my bank, but SBA does offer some startup loan programs.
SBA.
Small Business Administration. It's a government-backed loan. Lenders and banks offer these loans, but the Small Business Administration backs those loans and guarantees them. So it gives lenders an opportunity to maybe look at something that is a little bit more riskier than they conventionally would look at. So when we look at business lending, there's just a few guidelines about the process that I could talk to you about. I think that most bad experiences and loan turndowns are a result of inadequate education. It's the bankers are limited understanding of your business, perhaps, and your needs, and your possible limited education about our policies, procedures, and constraints. So it's a communication issue. As a general rule, lenders want to look back at a 3-year history when they're making a business loan. They do that because they want to see trends of, are your profits going up or are they going down? And also, we look at 3 years, business and personal, and we average those numbers out. So you might have a lower year, but we're going to average those numbers together. Most banks require, and ours certainly does, require a personal guarantee from the owner of a business. This is often a sticking point. People say, why do you need my personal guarantee? My business is successful. You can see my profits. A big part of that is probably that they want your psychological commitment. They want you to be in it just as much as we are, and they want your total support and dedication in making the business successful. So that's certainly not the primary source of repayment is a personal guarantee, but it's just kind of a little thing that's stacked on. A little bit about the application process. Different types of loans require varying degrees of information submitted, and your banker usually will provide you with a checklist of what they need to collect from you. The amount and type of request will determine what specific requirements are. So getting the loan you request is a matter of being prepared. You can't assume that bankers know everything about your business, and it's your job to educate them. It's also important to understand loan structure, and your banker will help you structure your loan correctly based on what you're financing. It's important to help them understand the history and nature of your business, the management, who are the owners, the managers, what are their backgrounds. I can't stress enough how important those are. Financial statements, you know, when a loan package goes to an underwriter and they get a package of financial statements, not only tells part of the story, the underwriter is only seeing the numbers, but helping your loan officer understand your history and your management gives us the opportunity to, when we submit that loan package, to kind of paint a picture for the loan underwriter of, you know, kind of the heart of your business. I, over the years, have turned loan requests around just because I had full knowledge of what, you know, understanding of this business, and was able to, you know, input that side of the picture into an underwriter. Banks now offer streamlined loans for smaller amounts, options like for loans that are under $100,000. A lot of times you don't have to even submit financials anymore, so they made that process. And then finally, I'd just like to mention, we also do commercial real estate loans, and these have changed a great deal over the years. Used to be that you would get a commercial real estate loan for 5 or 10 years and have a balloon payment due at the end of that. There was no such thing as a fully amortized commercial real estate loan. We have those now, just like a regular mortgage, where you can get a fixed rate and fixed terms for 15 to 20 years. And typically on something like that, you would have to come up with 25% down on commercial real estate. And then if you're looking to buy equipment, another option that banks offer are equipment leasing and lease lines. And a lot of business owners like these because we can do 100% financing on them. Over 100% actually, because we'll finance in shipping costs and installation, those type of things. And those are, even though they're leases, they're very similar to a loan. They have what's called a dollar buyout at the end of the lease, and you then own the equipment. So I just wanted to talk a minute about some common pitfalls that businesses make that make it difficult to do loans. The first one is mixing personal and business finances. Don't do that. Don't put, you know, business expenses on personal credit cards and that type of thing. Underwriters hate that. And speaking of credit cards, even on a business credit card, don't put a, you know, don't go out and buy a piece of equipment with a business credit card and then, you know, come to the bank later looking for long-term financing. It can be done, but it makes it difficult. It's better to seek the, you know, going back to what I was talking about, this correct structure and the correct loan from the beginning. Managing your personal credit is just as important as managing your business credit. We look at both. I've had instances where where I've had very profitable